This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com, and I have with me this morning Charles Shoesmith, well-recognized and prolific writer on the web, who is also the publisher of the website of2minds.com. Good morning, Charles. Welcome back to Macro Analytics.
Thank you, Gordon. Glad to be here.
Charles, we featured your latest book, Why Things Are Falling Apart and What We Can Do About It, last month. Before we start, how are the sales going on it?
Well, for a self-published book, I'm happy to be selling a few hundred copies a month, which is, it's not fantastic, but it's getting out there.
Well, I just want to make sure I gave you a plug for the book here before we started. We have a tape up that describes what the book was about, and it is an excellent one, so I encourage everybody to go to our library and listen to that. You've written a number of articles recently, which I pulled together under a caption I called A Delusional Dysfunctional State. And you put together the key ideas from those articles into a few slides for us this morning, and I was wondering if you could take us through them.
We can contextualize, the global economy's problems in a lot of different ways. One approach that I think helps us understand the true nature of our problems is to look at risk. Is the risk being exposed and openly discussed in a transparent fashion, or is it being masked, cloaked, and hidden? Of course, if you're hiding the risk or misstating the risk, then you're setting up a really poor decision-making process, because if you can't properly assess and price risk, then you're going to make some really poor decisions. And so from my point of view, the central planners around the world, which in the United States include the Treasury and Congress and the Federal Reserve, they're masking risk, cost, and consequence. This is leading us to a very serious situation where we can't make good decisions. I'll give you two examples of how risk and the cost are being hidden from us. And one is, we know that the Federal Reserve is monetizing the fiscal deficit. And that's a fancy way of saying that when the Treasury sells bonds to fund like the $1 trillion+ deficit that we're running annually, then the Fed buys bonds and takes them off the market. And so the risk and the consequence of running enormous structural deficits is now being masked. It's being hidden by the Fed's actions. And in a similar way, the Federal Reserve is buying mortgage-backed securities in like vast amounts. In the 2009-2010 timeframe, it bought over 10% of the outstanding mortgages in the whole United States. And now it's buying another 10% at a clip of about 45 to 50 billion a month. And so this, of course, is lowering the interest rates and taking toxic mortgages off the books of banks. And it's a form of subsidy of the housing market, but it's also masking the risk and cost of these massive interventions.
Charles, it's phenomenal how blatant and badly risk is being hidden here. Through financial repression, it is forcing people into taking more risk unknowingly as they chase yield at these incredibly low rates and artificial rates. I wrote a paper here recently called Counterfeiting Risk-Free, and I won't bore our listeners with it. It's up on my site to go through to show how governments themselves are in fact using this risk. Treasury bills, bonds are considered risk-free. It's only recently we've seen some of them not being AAA. Even a threat of a downgrade is worrisome because the whole entire credit structure is based off what is considered risk-free, which was traditionally sovereign debt. Clearly, that is no longer the case. There's tremendous risk, but it's not yet being priced in. And games that are going on are phenomenal. Just one here in the last couple of days. Egan-Jones has now been barred from giving any kind of ratings on the government debt, mortgage-backed, exact securities you're showing on this chart for 18 months. And why? Well, apparently in 1995, in their original application, they made a statement that they'd been doing that work at that point in time, and they're not. Of course, they've been doing it for 20 years, but based on that, they can't do any kind of credit rating on the government. And they're the only ones that have been leading the downgrades. So there's a muzzling going on in Europe. They've now passed a bill here, last week that came out, that the credit agency, remember, they went into all the offices in Milan, et cetera, and raided them for documents and files on the major credit rating agencies. But now they have a law in place where the credit agencies can only issue 3 times a year, 3 specific dates, and they have to publish those dates a year in advance, any unsolicited credit ratings of the government, which is basically barring them from being current or accurate. They're doing everything they can to, well, I'll leave it to the listeners to guess what they might be up to there, but it certainly doesn't make any sense if you really believe we want clear and transparent understandings of the risk of sovereign debt, does it?
No, it's blatant, and it's creating the delusional state that you described. Well, let's move to the next slide so that I can talk about one of my favorite analogies or metaphors, perhaps, what happens when you mask risk, cost, and consequence. And I call it spoiled teenager syndrome, because it's something we all see in other people, of course, not in ourselves.
Nor in our own children.
No. It's sort of like a teenager, who doesn't have a lot of life experience. And so if they lose their iPhone and you instantly buy them another one, then what did they learn about risk and cost and consequence? And then if they get a C- on an exam and then you call the teacher up and berate them and demand that they get a B, and what are they learning about that? And if they get caught shoplifting and then you get your high-powered attorney to get the whole thing squashed or released without a charge, what are they learning? And so we see these kinds of things and we go, oh, that teenager's just spoiled rotten. And what we're really saying is that teenager has not been exposed to the actual risk, cost, and consequences of their actions. And so I think we can draw that parallel with central planning, that in central planning, it's all about telling everybody, reassuring them that there's no risk, no cost, and no consequence.
It teaches us about avoiding prioritize. And there's always trade-offs associated when you have a limited amount of money and you have a lot of things that you want. You have to prioritize them. The way we're going at it with printing money, we don't prioritize. We just spend. By the nature of prioritization, it means some will win and some will lose. It means the possibility of today of losing a demographic block. And today this must be, avoided at all costs, since every election, as you notice, has become historically closer and closer. It also means towing the line within your own political group because of the degree of this polarization. You just can't afford to lose any of your own base. And when bases are either extreme right or extreme left, this makes it difficult to fight for the traditional middle. So these politicians have created a consumer society that is spoiled. To take away any of the goodies like entitlements just can't happen. It's because we've never forced our society for at least 35 or 40 years to prioritize. And that's the problem. That's why children get spoiled. There's no trade-off that they have to decide. They just want it all.
Yeah, that's a very good characterization. And then we have another topic that we're going to discuss today, which I call the parasitic financial sector. We all know that the financial sector's profits have grown considerably, and they've taken a larger and larger share of total corporate profits. And so what that sets up is a dynamic where everybody starts depending on this financial sector to keep spinning out ever higher profits, regardless of where those profits come from. In other words, the politicians need those profits for their lobbying and political donations and contributions, and the stock market needs, like the financial sector, to spin off profits to justify these sky-high valuations. So everybody becomes dependent on a parasitic financial sector, which is actually counterproductive to the underlying economy. And one term that gets thrown out a lot is neoliberalism. And I just want to mention what that means is that, a neoliberal approach is that if you liberate the financial sector from government regulation, that it will use market mechanisms to make profitable use of capital, and much more profitable use than the government can manage. And of course, there's a kernel of truth to this, because we know that government is like a classic misallocation of capital is the government's general way of dealing with its investment. But what happened in practice is that the neoliberal financial sector has either captured or become partners with the central planning central state. And this has led to the perfection of crony capitalism that we see now.
I see what's happening here with this parasitic financial sector is it's an artificial growth of the financial sector. We've got a disproportionate percentage of our economy. I have it that over 30% of all profits right now are in the financial sector overall. Over 44% of our equity market is now financial. And I know you've got a chart here as a percentage of GDP, but it's creating two massive problems. One, this is unproductive bleed of capital. Money is not going into capital investment, and you and I were talking just before the show. It's going into hedge funds and private equity, the former to arbitrage price differentials and the latter to strip assets from existing enterprises. It is basically about manipulating non-operating expenses on the bottom line versus the top line revenue growth, where the risk is. It's too risky. Well, the former is risky, and the latter, that is investing on the bottom line, is an easy first step if you've got cheap money available, which we now have. And any stooge can win a game if you can push your snout into the money printing trough quicker, and that's what's happening. And the second thing is, a really good quote I saw from a leading Chinese economist, is that in America, the finance sector is attracting the best minds. And so, and as he said, in America, the best and the brightest are not building products people want, but rather are figuring out how to pick the pockets of others. And that's what's going on. We're not investing in productive assets and applying our capital that will create growth, will create jobs. We're manipulating a balance sheet. That runs out eventually. It puts you into a death spiral. It's only a matter of time before you're below the event horizon.
Let's look at the next the slide I brought in of the financial profits as a percentage of GDP. And it speaks to what you just described. If we look back in the 1950s and 60s, which were by every account the heyday of American capitalism and productive growth, where more people were being hired and wages were rising in real terms, and corporations' profits and sales were rising, we can see that the financial sector was this very minimal 1.5% of GDP. In other words, the economy was growing, and it did not require the dominance of the financial sector to do it. Then we look at the stagflation and horribly destructive 70s, and then we see financial profits start spiking, despite the fact that the rest of the economy was in shambles. Then, and we see this financialization. Suddenly, financial profits are over 5% of GDP. What was that era characterized by? Speculative bubbles that burst. That is just not healthy. And if we move to the next slide, we can. This is another measure which I like, which is financial profits per full-time employed worker. And in other words, of the economy, not workers in the financial sector. This is of the 112 million private sector full-time employed people. We can see that, the financial profits per worker have skyrocketed, which is another way of saying each of those workers is paying an enormous sum of money out of their wages as financial profits.
It's a great chart, isn't it? It's actually somewhat frightening, but
the financial sector could not get this dominant without the central states not just enabling it, but enforcing it. In other words, they're enforcing that level of skim or bleed, as you called it. For instance, the student loans, well over $1 trillion now. The state has mandated that you can't discharge that debt, which makes it unique amongst all types of debt. it can't be discharged in bankruptcy. And so it's created a debt serfdom for students. And then the states socialize the entire mortgage market. Roughly 95% of all mortgages are backed or guaranteed by FHA or another one of the housing agencies. And so what this does is it's transferred all the risk from the lenders to the taxpayers and masked the risk that housing is still in disequilibrium. You know, that housing demand and supply are really still out of whack, only that all that's been hidden from us by this kind of massive intervention and socialization of the mortgage market.
If you were GE, Charles, what would you do? Get in the mortgage business or student loan business and lending out money, and what's a student loan being charged at when it comes due? Probably north of 6 to 9%, 12%. Certainly gets into almost credit card rates pretty highly, right? And you can be controlled with government because no matter what, you're going to be bailed out if it doesn't go bad. It's controlled with regulations and rules. You can't go into bankruptcy and discharge a student loan, so you're well protected, no risk. It's a kind of a government game. Or would you take as GE Capital and go and build a factory that's going to take you 15 to 20 years to get it paid back? The technology may be obsoleted in the middle, and you may find yourself on the wrong end where 65, 70% of your product this year is still on the design board for next year with risk because product life cycles are so short. Where would you go? Well, the answer is you go into the financial sector that's more or less controlled with government through guarantees or regulations. And therefore, what happens is there's no job. There's no creation of internal growth. It's like a farmer. You're not planting anything in the field. You're all sitting in the granary eating seed corn.
Boy, that's an analogy we can all understand.
Unfortunately, it's exactly what we're doing. And we're getting fat, lazy, and spoiled sitting in the granary eating all the seed corn, but it's getting pretty low.
I wanted to talk a little bit here about another aspect of delusional state of mind, which is the central state, our federal government, keeps insisting that all these enormous entitlement promises that it's made will be kept. And this flies in the face of what we know demographically, which is that full-time workers and to those drawing federal benefits is already 1-to-1, and the baby boom is only beginning to retire. And there's 10,000 people a day entering Social Security and Medicare. And because of the demographics of the size of the baby boom being so much larger than the generation before it, the number of people passing away and leaving the system is considerably smaller than the number of people entering the system. And that's going to be the reality for 12 to 15 years. And there's no way the central state can pay the entitlements that it's promised when there's only one worker for one beneficiary.
And they know that.
Yeah, they know that.
And they're doing absolutely nothing about it except waiting for the crisis that will inevitably come.
Yeah. And so
that's lack of leadership.
Yes, lack of leadership. And so part of the delusion is either not to state history or to state history in a massaged or a manipulated way. That if anybody goes back to when Social Security was designed in the 30s as sort of like an income guarantee for those who could fall into poverty as they aged, back then I think the average lifespan was around 62 or 63, and the age that you could qualify for Social Security was 65. In other words, it was designed for like a relatively few number of people who managed to outlive everybody else. And now that's just not the case. And say in my own family, my mom is 82. She's been drawing Social Security for 17 years now. And my sister is going to qualify next year. So and my mom being healthy, and a lot of people are healthy in their 80s, she could live another 10 years. So we have two generations drawing these benefits as the number of workers decline.
And you notice that the head of finance in Japan this week talking about saying that the elderly should hurry up and die in Japan. It was a very bad political statement, but he was speaking the truth.
And of course, the Japanese are notable for having a very long lifespan, but the rest of the developed world isn't that far behind. People are living into their late 80s very routinely. And then, of course, what's masked, another part of the risk, consequence, and cost that's being masked is the real wages of the people earning money and paying into these entitlement systems is declining. And so if you're going to tax them more to pay for these entitlement promises, their real wages are going to plummet even faster than they're already plummeting. So how are they supposed to buy goods and save money for their own retirement and invest capital and stuff? I mean, they have less money. They have less disposable income. It's totally unsustainable. I think we should talk a little bit about the psychology of delusion, that we actually prefer delusion to the risk of adaptation. And this is a little different than talking about cognitive biases, which, we've all seen these lists, and there's been dozens of books written about cognitive biases in investing. And, humans are prone to, irrational assumptions and leaps of faith and so on. But I think deeper than cognitive biases is that we're actually really drawn to states of delusion and maintaining them because they're safer, at least on the surface, than risking change.
What we have here is perception is reality, that old expression. And when you're in a game of perception, delusion is a key element of the strategy. And we now live in my mind, Huxley's world of spin, misinformation, manipulation of the public sense of fear and greed. Witness this game of crisis brinksmanship we're now playing here as we went through the fiscal cliff, and now we're going to get the debt ceiling, which has been deferred. We seem to play one game of crisis brinksmanship after another. And what is lost, it appears, is that after the crisis is temporarily alleviated, we find government spending has actually gone up, or taxes have gone up, nothing has actually been solved, delusional but deferred to the next crisis. The government is now so practiced in this, and it's not just the U.S. government, in this art form, that it now establishes the crisis dates to force through more legislation that I can assure you will involve more spending and taxes, but no solutions. We just went through this fiscal cliff, and I think this is representative of the degree of this delusional and dysfunctional state and why we're there. Hidden behind the headlines of that settlement on the crisis, when it was averted, are a litany of earmarks, pork, political graft that was not hidden, it's blatant for those who want to take their time to go at it. But how many middle to low income Americans know their taxes are actually going to go up here this month? And after the fiscal cliff was averted? Likely few, because Obama was very clear that he was standing firm and taxes increases wouldn't happen. Well, what happened is the biggest item, the biggest issue, was the expiration of the payroll tax holiday. And it was left to expire. Everybody just moved on that item. So your taxes are actually going up, but technically it wasn't a tax increase, was it? What I'm getting to is you have to be a lawyer now to listen to the evening news, because of this spin and manipulation is at such an advanced stage. This doesn't build trust, and I've written about a crisis of trust we have. And it seems that the public can no longer trust the network news, for example, to give us the full story, only a spun story. And of course, then it depends on which network you listen to determine how you want it spun. Flip the channels between Fox and CNN on the same story and tell me if they're even remotely resemble each other. Gone are the days of, Walter Cronkite and the facts you could trust. The media no longer reports the news, but rather a position. And they make that very clear, for example, young journalists, as the old-timers are quitting and discuss, and I've talked to a number of them. Positions are about the perceptions of a demographic marketing space and selling advertising. And politicians are playing the same kind of game. And therefore, that's why we don't have leadership. That's why it's becoming so delusional. And when it does, it becomes dysfunctional. And the public, they don't want to face this, as we started with the show, of having to prioritize and go without. They expect it all. And so we've locked ourselves into a spiral here that's very tough for us to reverse from without bold leadership that can step out of the mold. And that's very tough with the campaign finance levels that are required today. And we've lost the days of the Winston Churchills and the Delano Roosevelt and I would say Kennedy that were willing to step out on a limb. And that's what's fostering. It's because politicians play this game of perceptions, and everything is about perceptions today. And if you speak the truth, then you're considered to be a doomer and gloomer. And there's a difference between being an idealist and a realist.
How come people are accepting the wholesale manipulation of perception that you've so ably described? And I think that whether it's unconscious or subconscious, they don't want to deal with the fact that the entitlements that have been promised are impossible.
Precisely.
And so the safer bet in their mind is to just listen to the lies, basically, and go along with them because they're terrified of the prospect that it's all going to go away. And yet it's ironic because the only way to solve anything is to face that, as you say, practically and realistically. And so if we're not going to, if we refuse to do that, then the delusional dysfunctional state will implode.
A few years ago, Charles, I was talking to a family member, and I was being very frank with some of the points that we're talking about here today. There's nothing new in them. And this particular family member suddenly in the conversation was noticeably angry with me. And what they were so angry about was, well, if this is true, what are we going to do about it? What's going to be done about it? And I could see their rage was as much about confusion. And now that they had been told this, they needed to hear the solution and the answer and to know that everything was going to be all right in the morning. And right now we have a position where things are not going to be all right in the morning, and bad things do happen to good people if you haven't made the right sort of prioritize the right kinds of decisions for a long period of time. And we've had bad public policy, bad fiscal policy, bad monetary policy, poor global governance for a sustained period of time. And now we're going to pay the consequence. And there are no easy, quick fixes. You can't take a pill and it's going to be all right in the morning. And nobody can accept that. Like your spoiled teenager syndrome. They're not going to accept, no matter what you say, they're not going to accept it until they get what they want. And that's a very ugly combination that we now face. And I don't envy the politicians of what they face if they have to face that conversation I had with a family member here a few years ago.
I think that summarizes the state that we're in very, very succinctly, Gordon.
Well, I appreciate the time, Charles. We went a little past our deadline, but a great conversation. I very much enjoyed it again, as usual. We're going to be back here later on this week, and we're going to pick up a little bit more on central planning. Any comments that you'd like to make, and also how our listeners could learn more about the work, your writings, and your website? Please
stop by my website, of2minds.com.
Talk to you a little later in the week, Charles.
Thank you, Gordon.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.